Welcome to the Money Making Channel. Purchasing rental properties or investing in real estate can yield profits that are significantly higher than average. There are many advantages to purchasing rental properties, but is the opportunity for more profit worth the danger and hassle of being a landlord? Normally earn in the stock market. How does investing in real estate compare to the stock market, which offers a wide range of potential returns and requires a significant time commitment in addition to the potential profits? If you must invest your hard-earned money, thoroughly analyze your options. If you want to improve your financial future, be sure to subscribe to the channel and hit the like button if this video was useful. I assist people learn about money, personal finance, and investment. Banks will lend the majority of the money needed to buy rental properties, with investors only needing to put down about 20%. Which is one of the biggest benefits of investing in real estate. Ask a bank to lend the majority of the money on a stock purchase, and they'll laugh you out of the building because stocks are seen as a much more volatile and risky asset. This leverage increases returns significantly when things go well, but borrowing money also increases risk. See how changes in property prices can affect your investment results. Incredibly, you would receive a 30% return on your down payment if you put 20% down on a $400,000 property, and the price rose by 6% in a year. Similarly, a 30% loss would result from a 6% decline in prices over a year, contributing 10%, 15%, or 20% of your income to a retirement account could not be easier. There is no need to constantly be on the lookout for your next investment if it is extremely simple to dollar cost average, or regularly invest a set amount of money in the stock market, which cannot be said for purchasing rental properties. As you build wealth with real estate, you'll constantly be considering your next move, whether it be selling your home and investing the proceeds into a new one, or buying another property, which can only be done once you reach a certain amount saved and have the financing lined up. Saving the money for the next purchase, which could take years, while you're saving the funds for the current purchase. Finding the correct property can be really gratifying, but it takes numerous hours of searching and some luck. Purchasing real estate frequently demands an unbelievable amount of money, such as $20 or $30 million. When you're not working, it can be nearly impossible to save up a % down payment, making a significant amount of money, and haven't made any investments in a while, saving up 20% or more for the down payment, 20% or more for closing costs, 20% or more for immediate improvements, and 3 to 6 months worth of expenses in the property can be intimidating, to say the least. Does it really make sense to put money into a savings account for years until you have enough to buy a property? Or are you better off investing in programs that assist first-time home buyers purchase a multifamily house with a 3% down payment, lower cost if they want to live there, though? It begs the question of whether you should even invest in real estate with just a 3% down payment. You might think that once you have enough money, you will be able to get financing for a property, but this is simply not the case. In addition to down payments, banks will examine your credit and finances, and frequently they will want to ensure that you personally have enough income to cover the mortgage on the rental property, as well as your own bills. This creates a problem for those who don't make a lot of money, have debt, such as a mortgage, vehicle payment, or school debts, and don't have a W-2 employment. Since self-employed people or company owners sometimes have trouble qualifying for loans even if you earn a lot, having a lot of tax deductions might prevent you from receiving a mortgage since they lower their yearly income. There are a number of programs available for less than ideal borrowers, but they will be more difficult to find and the terms will be less enticing. Becoming a good borrower and the bank size can be a difficult process with no guarantees of ever getting there. Nobody wants to answer calls at 3 in the morning to fix toilets or deal with disrespectful tenants who damage the property or don't pay rent. But these situations are rare for responsible landlords who carefully screen their tenants and keep up with maintenance. The biggest challenge to owning rental property is the hassles you'll experience managing and dealing with tenants. However, you may employ a property manager to lessen the strain and avoid those early morning calls, who will handle finding renters, doing repairs, and so on, but that will cost, on average, roughly 10% of the monthly rent, which can significantly reduce or completely eliminate any monthly cash flow. As a general rule, owners who prefer to self-manage dedicate 4 hours per month to overseeing a rental property. There are investments that provide a fair amount of monthly income flow, but the real cash flow is sometimes significantly lower than investors first expect because it might be challenging to predict exactly how much you're going to spend on maintenance. Inexperienced landlords sometimes overlook or underestimate how much money it requires to maintain the property. Unfortunately, Estimating these numbers incorrectly might make a bad purchase seem like a great deal, and by the time you learn the exact cost, you're stuck with the property. Investors need to put an appropriate value on upkeep, taxes, utilities, insurance. If you're not an experienced landlord, it may be difficult to manage capital spending, vacancies, and rental revenue. Once these costs are added together, your monthly profit may disappear unless you are really rich and have a large number of investors. Investments: if you wait for years to eventually have enough money to complete the purchase and invest almost all of your money in one property. For instance, buying rental property might lead to a lack of diversity. You have a lot of your eggs in one basket with the down payment and repairs. What if the house has flaws that you're not aware of, such as structural or geographic concerns? What if the area isn't what you expected and values are really falling and no one wants to rent there? What if there is a fire on the property and you have a protracted conversation with the insurance provider about your settlement concerns? Before buying a house, consider whether investing too much of your money in one single venture would be too expensive and time-consuming. Real estate is one of the least liquid investments available since it requires time and money to sell investment property, and transaction costs can be high unless you hire a lawyer to carry out a 1031 exchange. The negotiation process for financing and inspections can take months, and after the property is sold, you can be hit with a hefty tax liability. Hanging onto a property that isn't producing income is a big risk that can quickly drain your wallet. If you relocate and choose to sell, you'll be faced with the decision of where to put the funds, whether it be into a new property or other investment. If you encounter problem tenants, selling the property could be very difficult unless you provide a steep discount. Investing in real estate has proven to be an excellent way to achieve a number of goals, but you should be aware of the drawbacks, and not every investor is cut out for owning rental property. But those who are willing to put in the effort have the potential to become extremely wealthy. Thanks for watching. Make sure you subscribe and hit the notification bell for more videos like this.